Let's see how Fibonacci levels can combine with the Arnaud Legoux moving average ALMA indicator in a specific context with extension levels that are derived from basing Fibonacci levels on a well-defined horizontal price range that price breaks above with a successful bullish continuation. Once the first extension levels are reached, there's the first sign of weakness of the trend. This gives more bearish context to the otherwise neutral movement over the past few days that has seen price relatively unchanged and in constant contact with the ALMA indicator. Given the reversal candles forming at the extension levels, the shallow decline emerging has more bearish weight behind it, despite relatively low selling volume. When the chart eventually recovers from this decline, it will be necessary to reposition the Fibonacci levels in light of these more recent developments in order to better identify where this current bullish continuation could begin to slow down. Just like before, reversal candles at the first extension levels add additional bearish context to the cross back under the ALMA indicator for a relatively sharp drop in a short time without exceedingly high selling volume.